Hey everyone, and welcome to another episode. It is now January 2nd, 2025. Happy New Year! It's the beginning of a new year, beginning of a new month, beginning of a new life. And welcome. Well, in this show, what we do is we talk about stock trading and we look at different trading strategies, we look at different investment options, and we look at how you can grow your portfolio and how you can get to that $1 million in portfolio. Now, we don't give financial advice, but we do look at different stocks and trading strategies that you can implement for the year to come. And what better time to start investing than now, the beginning of a new year and of a new month. And so, with that being said, now the largest merger that should actually have taken place in 2024 is actually back on the table now, and that is Discover Financials and Capital One. Now, Capital One had actually announced 11 months ago, back in February 2024, that they were interested in purchasing Discover Financial Services for $35.3 billion in an all stock takeover. Now, when this was actually announced, the share prices of both companies had actually increased significantly, and so this was well needed and wanted by the markets. Now, for those of you who don't know, now Discover Finance, they are a credit card company, so they have their own credit card platform, and they're also a commercial bank, so they accept deposits and they offer loans. Similarly with Capital One, and however, does is not a credit card company. They do offer loans and they accept deposits as well. And so this merger would actually join in Capital One and Discover Finance would make them the largest credit company in America. And they would out surpass JP Morgan Chase, which currently is the largest one. And so the real significance of this merger is that right now the market is dominated by Visa and Mastercard. Those are the two largest credit card agencies in the world. And there's American Express as well that has been increasing in terms of popularity and acceptance across the United States over the past 2-3 years. And Discover Finance is about fourth place in the runnings. And so what this means is that joining forces together would now really give the top three largest credit card agencies some competition. And right now, what Capital One does is a lot of their cards that they issue are on both Visa and Mastercard platforms. And so the talks is that with this merger, once if it is successful, it will actually mean that Capital One will start offloading some of their cards from Visa and Mastercard and start using the Capital One cards. And so what they said they're gonna do is offload the debit cards, and then the credit cards will start getting offloaded afterwards. Now, to give you some context, Visa has about 130 million users, Mastercard has about 100 million, and Discover Finance has about 70 million. Now, the article I found didn't say anything about American Express, as it was not really in the conversation, but this really shows that with 70 million worth of users and acceptance across the United States, the merger with this Capital One will actually increase the likelihood and the usage of this credit card and debit card and platform. And so, like with anything, the merger would actually incur some costs in the short run period, but over the long run period, it really would drive competition. And so, as it stands right now, these credit card agencies are charging an exorbitant amount of fees, especially the largest. And so, what that means is that having another major player in the market now, they would be able to give them some real competition and possibly get increase in market share, as if they offer a much more attractive product to what the merchants are seeking for, then by all means persons companies will actually start shifting from the major key players into the smaller, less popular agencies, and so they would now start becoming one of the major key players in the United States and hopefully worldwide as well. So, with that being said, also with the Capital One and Discover Financial Services merger happening, the accounts held at both companies would still be the same. So if you ever check in a savings account, you have loans through them, mortgage, motor vehicle, personal loans, credit cards, it would still remain the same. The only difference is that the account numbers might change, but the services that you get would still be the same. However, the one contingency right now is that as the mergers are more likely to happen, if it does go through, then this would mean that the rewards offered by both companies, they would have to actually come to some sort of merger in terms of how they do it. Will the customers on both platforms still have the rewards from each? Would they join them together and offer it to both sets of customers, or would they just create new rewards? No, those are things that would have to be taken into consideration with the new merger once it happens. Now, the Capital One and Discover Financial Services merger is actually going to be the fifth largest merger in the United States, and that would be just behind JP Morgan Chase, Bank of America, and Citicorp. So those three companies have taken up the top four mergers in terms of in the United States so far in history. So this would be the fifth largest one. And so under the new presidential era, it's more likely that this will happen than with the previous president, due to the relaxed approach that he's taking towards his office and his plans to stimulate and grow the economy. And he really is looking to increase competition, and right now the competition across the credit card agencies is really two worldwide and three in the United States. So having Discover and Capital One merging now would offer another key player and competition in that whole credit card ecosystem. And so what that means is that if more persons are using one or both of these entities and they have a card, that it's more likely that they would prefer to use the services that a merchant would offer rather than going to another competitor where they pay more fees. And also the merchants would prefer having these services, especially if it's cheaper than what they would be paying for the other competitors. And so this really would add into the value and just the whole ecosystem of the merger that is scheduled to take place. Now, another thing to note with this merger is that currently, as it stands right now, Capital One is very volatile. So, over the past 4 years, the stock price and the revenues of Capital One has been all over the place. So 1 year the price and the revenue will be doing well, another year it's doing poorly. There's an article out that actually said that the Capital One shares is even more volatile than the S&P 500, and this should not be taken lightly because over the past 5 years the S&P 500 has been very volatile. So the whole comparison and of Capital One and the S&P 500 as it stands right now is not such a great look for the company, but Discover Financial Services is a much more stable company. They have a much better stable revenues, stock price, growth appreciation, actual stock price projections over the long term period. And with the fact that they offer that credit card agency platform, so instead of having to issue their own credit cards or having to issue credit cards on another agency's platform, they can just issue it on their own platform. So this would also add to the stability and the growth that they currently are experiencing and have been experiencing. So what this really means is that as we look at the share price over the past 12 months, so 2024 has seen Discover Finance grow by over 54%, and Capital One, on the other hand, has grown by 34%. Now, if the merger does occur, then these growth rates would continue to be expected, and with the banking industry right now set to really do great things for 2025, assuming interest rates can continue the downward trends and inflation is below 3%, not financial advice, but assuming these things are all true and occurring, then as long as the merger happens with Capital One and Discover Finance, then there really is no reason why these two companies should not be doing well, because it would really increase competition. It would also increase the acceptance and the usage of the whole Discover Finance credit card systems. And so with more persons having a Capital One and Discover Finance card in hand, this would also increase the likelihood and acceptance of these companies by the merchants, and so it would increase the market share in the United States, which would increase competition, and that would also increase demand, which really would trickle back down into the revenues of the company and all the way down into the net profits, which would then increase the share price of the company. Now, that is the positive side of it. Now, the drawback is that if the merger happens and it's not so successful, so let's say Capital One, for instance, has a lot of bad debt on the books, then they'd have to be focusing more on damage control and actually recovering as much that of what they can from these outstanding loans. And so what that would mean is that a lot of Discover Finance's resources would now be spent in trying to keep the company afloat. And so rather than spending developing the system and actually creating it creating a much better platform to accept the much greater demand that would be scheduled to come. They would have to be spending resources on loan recovery and actually not ensuring that things are bad in the system. And this is just one negative possibility. It's not a certainty that would happen. And as they always say, there's always two sides to a story. So there's a positive side and there's a negative side. And so I personally like to look at both extremes, and then I look at which one is more likely to occur and which one is more likely to happen, and then I make my assessments and my judgments based on that. Now, the regulators would also be taking this into consideration, and if they believe that this merger would have a negative impact on the financial system, then they'll definitely be blocking it. And if they see where this merger would increase competition and also benefit the consumers and the merchants alike, then they'd definitely be for it. And so these two things have to really be taken into consideration. And so that is really is it in terms of how Capital One and Discover Finance has mergers will impact the whole financial ecosystem, and why it is important, because competition really will drive more competition into the credit card agencies and that ecosystem right now. And so the dominant players would now start experiences smaller market shares, while the smaller, less dominant players would start increasing their market shares. And this would be due to the likelihood that they are now the largest debtors in the United States, and so also they be focusing on increasing their platforms, and so allowing for more merchants to accept their items. And so that really is it for today's session. Thank you so much for tuning into this episode. And if you like this content, I just ask you to give us a thumbs up or a heart wherever you consume this material. Share this video with a friend and have that discussion. Comment. Also, if you have anything to share, to say, any questions to ask, I'll definitely get in touch with you. And also subscribe or give us a follow so that you do not miss out on new episodes as soon as they are released. Until next time, take care. Love you guys. Bye.